Morning all, how are we all doing? Happy Wednesday, big day today, FOMC day. Big news coming soon. How is everybody? Morning Christian, Kenley, Neo, JC, Peter, Amy, Baggy, how we doing? Paul, Virginia. So we've just had some news out this morning for the pound. CPI came out less than expected. Big shock. Was not expecting that at all. Don't think the market was either, looking at the way the pound's reacted. So we were on 6.8. We were forecasting an increase of 0.2%, and we actually got a 0.1% reduction. So actually going the right way. What do you know? So big move down on the pound. Whether it sticks or not, we'll have to wait and see. Obviously, the main news this week for the pound is the interest rate increase on Thursday, which is forecast to go up to 5.5. So the fact that that's come down, I don't think is going to affect the interest rate because it's still massively high. We need 2%. Yeah, just because it's come down 0.1% year on year, it's not really moving, is it? It's just come down 0.1%. It's stuck. So potentially, I think we still need that interest rate rise. Whether that puts an impact on future, we'll have to wait and see. We'll see what the monetary policy summary comes out as on Thursday. But so far this morning, negative move on the pound. And obviously, we'll have a look at that in a minute. Main news today is the Fed rate later. So there's no news for the rest of today. We're flat now until FOMC. So FOMC comes out at 7 o'clock. That's when we find out what the Fed have decided to do with their rates. Forecast is still a 5.5, staying as it is. The press conference at 7:30 is where we find out what the Fed is planning to do with rates, or hopefully planning to do with rates moving forward for the next quarter. That is when the market movement comes. So usually somewhere around about 15 to 30 minutes after the start of the press conference, typically 7:45, 8 o'clock, that's when we start to get the move kicking in. So that is where the volatility will come, but we often will get a massive spike off of that, which typically can go either way. It can either continue the route of the spike or it completely undoes it. So we'll wait and see what happens, but that's 7 o'clock tonight. We've got the New Zealand GDP overnight as well. That's the only other thing to be aware of. Overnight news, apart from that, we flick back. Okay, so that's yesterday afternoon. So overnight, the only thing we've had is Japanese trade balances and things. This, not quite sure how to read this one, but Japan's top currency diplomat Kanda, Japan is closely communicating with US authorities over Forex on a regular basis. We are closely watching FX moves with a high sense of urgency. This, I think, is more of a careful what you do with the dollar on FOMC message. As we know, that move on the US dollar yen, if we break this area and we start a move up on FOMC, Japan is going to want to start doing something about this. So this was kind of a little bit of a warning shot. I'm not sure what this means, this closely communicating with US authorities, because every time there's an intervention, they say it wasn't us. So why would you be open about that? But I don't know. But yeah, there is rumors, or rather noise coming out of Japan. So that FOMC makes the dollar rally. I think we're going to get some intervention in the next week. Bank of Canada interest rate 3.5. Nothing much exciting happening there. So there's our core CPI figure. 70% chance of a rate hike on Thursday versus 90% earlier. So as I said this morning, there is a chance that they may not hike. I don't think it's going to happen, but now it's 70% instead of 90. So it's less likely, but it's still more likely than not. Bank of England pause in rates rises to 31% from 20%. So it's just basically saying because that's come down, there's more chance of them putting a freeze on the interest rate rather than increasing it, but it's still way more likely that we will increase it. So business as usual, really. So nothing really exciting overnight. Looking at the DAX this morning, that's US dollar yen. Come on, terminal. There we are. So looking at the DAX this morning, we had a little gap. Well, we gapped up ever so slightly, filled it immediately. It's just pulled back to basically where we opened. So there's no gap fills in play. We're bang in the middle of the current range from yesterday. So could go absolutely anywhere at the open. I don't think we're going to hang around for FOMC with the DAX. There's no real reason to hang around all day because it doesn't really have any effect. The DAX with FOMC on the DAX, not at the moment, but obviously it will do later on this evening. So if we look at where we are on the hourly, we are still stuck bang in the middle of this range. We've still got the gap fill in play to the upside, but this market does not seem to be able to get any legs at all. We are just flip-flopping, as everything is. It's the most frustrating month I've ever traded through in my entire life. Just painful this month. Nothing we can do about it. But so upside risks today, literally 175, 200 ADR, because we've just had this solid drop. Downside, we're looking at last week's low and previous week's low, which is just above ADR, and then we've got a monthly to the downside. So if we break to the downside, first stop is yesterday's low, and then it's last week's low down there. So there's a good downside today. Very clear where we should be looking for support. Upside, no idea. So it'd be much harder if we break to the upside today to figure out where to get out. But we'll see where we go. This morning, we've got ADRs on the euro pound. So we've got an ADR hit on the euro pound. Obviously, this is all news. So we need to see how London opens and deals with this. But at the moment, obviously, we've got a weak pound off the back of the CPI figure. So euro pound is hit ADR. That's come off of ADR. You're not going to get any entries. Yeah, no, you have. Wow. Okay, so you've had a reversal alert short on euro pound. Very, very high probability of this coming back and just filling this gap today. I don't think this is necessarily negative pound. I think this is probably a knee-jerk reaction, and we're just going to get a V-shaped recovery on it because we are still going to increase interest rates on Thursday. So that's going to be, well, I'd say should be bullish pound, should have been bullish euro, but it wasn't. So, you know, the market's very hard to read at the minute. But as you can see with the pound, all we've done is we've spiked down, but there's been no continuation, and it's just an ADR hit, and it's only on two currencies. So this is not a massive move on the pound. It's a spike at the moment. So we need to wait for the morning to unfold and see what happens with that one. DAX is about to open. Morning, everybody else. Day trader, Tommy, Franco, Andres, Keith, morning. Okay, a bit of volatility coming in before the open. Missed it. That was too quick. I know I did get on. Yep, on short. So the 15-minute pre-market is there. This new version of the EA that I'm developing has taken the 20 because that was a little too tight. But if you took the 15, well done, you're in. If you took any pre-market range, well done, you're in. We'll see where we go. So downside, watch this level here, which is yesterday's low. We've got a little area of potential resistance here where we struggled to get through. We finally broke that. So this propulsion gap is potentially a downside risk as well. Other than that, we're off down to previous weeks. Assuming we break short, obviously. At the moment, we're not going anywhere. Just yet. Yesterday, somebody asked yesterday in the Telegram group about how I got out the DAX. So basically yesterday was a complete whipsaw at the open. We moved up and we just sat sideways literally for pretty much the entire session before we sold off. So as we sold off, we came back and tapped into that propulsion gap. We put in a nice bullish move just before the close. So got a long on there and exited. I think I'm basically a break even yesterday, $180 or something stupid. So, but yeah, I couldn't make much out of the DAX yesterday. So yesterday's high here is also a previous high on the US session the day before. I need to watch that area to the upside initially. Right, while we're waiting for that to unfold, as it seems a little slow at the moment. So looking at these pounds, so the pound US, done loads of drawdown control on this morning, scaling out of this pound US. I had two aggressive drawdown control positions on, both now obviously failed because we've been taken out on the news. With this type of movement, there's always an argument for removing stops so that this doesn't happen, because what could possibly happen today, and is quite a likelihood, is we do that and we just come back to here and we reset for FOMC and wait for the interest rates on Thursday for the pound. So there's an argument for removing your aggressive drawdown control stops before news, which I haven't done. As you can see, I've been stopped out on all of the positions. If you do that, you run the risk of this continuing and being a 200 ADR day. Yeah, and if that's the case, these aggressive drawdown control positions are going to blow your account. So you can't really do that. You can for the initial news spike, and if the initial news spike is basically retraced very quickly, you're fine. Put the stops back in place and then hope that's just going to be a false move and a run. But I didn't do that this morning because there's too much on this pound US dollar. It's been running now for 19th of July. So 2 months, basically 2 months yesterday was the anniversary of getting into the pound US dollar and sitting through this thing, which is probably the most hideous squeeze I've been in since the Aussie New Zealand, which was a year and a bit ago. No, was it the end of last year? No, about a year ago, yeah. So that Aussie New Zealand squeeze, I don't know if there's anybody in here that was in here then, but I got stuck the wrong side of that. I longed it there. And got out of it, totally got out of it. I think it was there. Just had to bail. Took about a 9% loss, something like that on it. But once a year event, that sort of thing. This one is turning into that at the minute. If we get positive US movement this evening, I'm going to think very carefully about exiting this completely and just taking the loss. Because this support that we're coming up to here, that breaks that level. There's very little to stop us until we come down to there, which is another 3 ADR. And then you're looking at potentially that low. So we've got this area here, which is potentially the next stopping point. So if we do not get any support at this level and we do not get a negative move on the US, there's just nothing to stop it. So the fundamentals have completely shifted on this pound US dollar potentially based on today's news. So it's time to get out and just take the hit, basically. Nothing you can do about it. Very rarely I have to do it, but sometimes you just can't sit in it forever. So you have to make the call. So we'll see how this works this morning. If we pull back into this area and FOMC comes out as a negative, we're going to find ourselves back up here by the end of this week, in which case it's not an issue at all. So we really need to wait on that Fed news and obviously on the rate on Thursday. So that is going to have a massive impact on the pound US. That is going to have a massive impact on the pound US. Unemployment claims probably won't make much difference after that movement because we'll probably go very quiet after the FOMC move. Assuming we get an FOMC move, obviously. The Fed just come out at a 5.5 and don't give any guidance, positive or negative, moving forward, market's not going to know what to do, exactly the same as it's not known what to do for the last 6 weeks. So we'll see. But we'll see what happens. We've got some ECB news coming out at the moment, talking head. DAX pushed back up. See where we go on that. We'll have a look at the RSIs and everything in a sec. Just want to see if it gets hedged on this. Looks like it's going to. Thinking about it. Okay, hedged. So we can worry about that later. See where it goes. Right. So RSIs and ADRs. So we've still got no weeklies, and this is the crazy thing. Yeah. Still no weekly ranges here. We haven't had any. I think we had about 3, didn't we? We've had 3 this month. So this entire month so far, we've had, I think, 3 weekly range hits. Yeah. Nothing on the monthlies. Yeah, we had nothing on the monthlies last month either. Yeah, so we're not even hitting our monthly ranges. Nothing's happening still. We're getting the odd ADR every now and again, but that's about it. RSI extensions, still nothing on the hourlies. Still no opportunities to get in. Yeah, until this market wakes up, we're still not able to get many positions on at the moment. So we've still got just these RSI extensions. And these RSI extensions obviously are getting a little bit more extended now. So we've got that move down basically that we've just experienced on the pound CAD. So on the 4 hour, that pound CAD is extended still to the downside. And if this move continues today, we're going to continue to go further down. And pound New Zealand, just rallying further and further and further away. We're extended, we're embedded. RSI is fairly flat. And obviously, as you can see, price is dropping heavily. So there is divergence there, but just not able to get any movement to the upside at all yet. So now we've got this move here to retrace on. Potentially, you could look at the whole move, but I would say that is probably already been undone. So it's that move there is what we're looking for a retracement on. It's broken straight through the 72. New Zealand dollar Swiss extended to the upside as well. So that one is just tapping into a potential resistance level from here. So we broke and accumulated around that level, retested it and dropped. We're testing that level again. So if we're going to continue on this downward movement, we should be looking for a bounce somewhere between the 24.72, which is here. But very, very slow grind for the last couple of weeks, as we know. Everything's a slow grind at the moment. The most frustrating market in the world. Abdul, morning. Morning, AZ. Finally got Financial Juice up and running. Nothing to get up and running, Franco. You literally go to the website. Well done. Traders bet on only one more quarter-point Bank of England hike this cycle. Is that including Thursday or not including Thursday? Please clarify. Thursday continues to rise, now 45%. Ooh, look at that. 45% chance of a freeze on Thursday. That would be the nail in the coffin. If that happens on Thursday, bye-bye pound. Off we go. Exit everything pound and flip the other way. We must not go on any borrowing binges, ever. No more news coming out. Okay, so DAX not going anywhere. Double-ended whipsaw today. So that's the RSIs. That's everything done. Analysis-wise, that's it. Nothing else to look at this morning. Brutal getting something free sometimes. I know. It's good, isn't it? There's a lot of free. There's quite a few free news services out there, but I don't think you can beat Financial Juice. It's been around for such a long time, and all the ones that when you go here, you go pro on Financial Juice. I've never understood this. Well, I do understand it, but it's like, here, go and have a look at our competitors before you come and sign up with us. Okay, so News Squawk, Live Squawk, and Gredzipos, I've always loved their name, are the only other main competitors for Financial Juice. These all offer a complete subscription service, and Financial Juice offers it as a free and subscription service. So I really don't understand how any of those other businesses actually make any money, because all you're doing is this. Anyway, Can you take a little look at CAD Swiss, pulling back in the wrong direction this morning? It's not gone anywhere this morning. We've gone anywhere yet. We are flat. Yeah, I mean, it's no real movement on this yet. So obviously we're looking for the profit take on this at the moment. Let's have a quick look at what oil's up to. Where did we end up yesterday? Oh, nice. Okay, so pullback started in oil. Fairly big pullback as well. So yesterday we managed to do an ADR. So far this morning, we've done 3/4 of an ADR, as you can see, because obviously it's 3/4 of its way onto hitting ADR. Use your indicator, Lee. So yeah, it's pulling back very nicely. So we'll see what happens. The Canadian dollar obviously will be helped into a little bit of weakness on that. So see how far this pullback goes. We need to watch that area there because that was the last accumulation we had that acted as resistance. Finally broke through it, used it as support, and off we went. So that area there, which is about 87.80, is our potential area of resistance. If you look at that level, which was, yeah, it's kind of a bit of a rough area here, wasn't it? But it was tested a few times. It's kind of the strongest support you could find in that mess, but not really great. So if you adjust that down now, whoops. So that weekly high, basically. Yeah, and we came back, tested it, and rallied from it. So that propulsion gap. So that is potentially 150 ADR down today. So I reckon CAD Swiss has potentially got more movement down today. The Swiss franc, we need to see what happens with the ECB. There's no news on the euro today. Tomorrow is your big news on the Swiss. Yeah, it's the rate for the Swiss franc tomorrow, and forecast to go up to 2, which will be bullish for the Swissy. So CAD Swiss, obviously, if you're shorting CAD Swiss and there's a bullish move on the Swiss franc, it's going to come down. So if we get that positive interest rate rise tomorrow and the market has factored it in properly, we should get a bullish move on the Swiss franc tomorrow. So that CAD Swiss will be coming down. But, you know, news at the moment is rocky at best. So trying to tell what's going on with anything is very hard. The aggressive I got the CAD Swiss yesterday has worked out nicely. Would you take off the aggressive in profit and treat it like any other position? Up to you, AZ. So if you've got an aggressive position on, which was up here, wasn't it? The reversal alert. I don't think that'll still be painted from yesterday. Oh, yeah. Blimey, that's a 15-minute. So your 5-minute reversal alert was up here, wasn't it, in that M pattern? There somewhere. So if you took an aggressive on this yesterday, you've got two choices. You can either take it off and do some drawdown control and then use either all of that profit to do drawdown control or use a portion of that profit to do drawdown control, or you can hold on to it. And if we get this Canadian dollar is going to move today. Yeah, when FOMC kicks in, this is either going to be up here or it's going to be down there. So if FOMC is negative US, it'll be negative CAD, and this will be down here. So that aggressive drawdown control can turn into a very, very profitable position. Some of my best months, 25% plus months, have been because an aggressive drawdown control that I've had on, I've managed to get a stop loss on it because it's had a big rally, and then we've had a news event which has driven it another ADR, an ADR and a half. So it doesn't just take you back to your average and allow you to do drawdown control. It flies and makes you an absolute fortune. So it's a tough call. It all depends how your week and your month is going, basically. So if you've got a fairly decent month, you could break even it and take a chance on it. If you're having a bad month, you might want to close it out and make sure you do some DD control. There's no right or wrong. It's entirely up to you. But just be aware of what's going to happen. Every time you need to make a decision as a trader, you have to think, what if? Yeah, every time you're going to do something, you need to think of the outcomes potentially that are going to happen on this position. So today, right now, if you've got something in profit, your options are close it, hold it, or break even. Those are the three things you can do. What's happening today that can affect your position? FOMC. Yeah. What are the potential impacts of FOMC? A massive rally or drop in the US dollar and Canadian dollar. So that's what you've got to think about. If we get a positive FOMC result, that's going up, you'll break even. If we get a negative FOMC result, you're going to be down there and you're going to be counting the wedge. Yeah. If we get a whipsaw, you're going to be stopped out and no better or worse off than you were yesterday, with an option now to do the same thing again tomorrow. Yeah. So you just got to think. You don't know what's going to happen. No one knows what's going to happen. Today, what you will probably find is this thing will just do this. Yeah. Because the market never wants to put a load of money into any currency ahead of FOMC. They want to sit there and they want to wait and see what's going to happen this evening. Because there's no point in saying, right, let's buy a load of Canadian dollar if the US dollar tanks tomorrow, because the CAD will get dragged down with it. You'll be going, oh, I wish I'd have bought it at a cheaper price I could have got tomorrow. Yeah. And there's no point in getting out of positions because you don't know if you can make more money later on this evening or not. So they hold. We tend to get a holding pattern on FOMC day where we just go sideways. So those are your choices. I can't make that choice for you. You've got to make that choice yourself. This is the trading bit. Yeah, position trading with the market reversal alerts EA is very easy. You put the EA on the chart, you let it do it for you, and everything that works out, you just get on with. When you do aggressive drawdown control on VPS, that's your trading. That's the real trading part, because that's the bit where you've got to actually make trading decisions. So it's nice. We don't have to do that very often, do we? Because most of the time it all looks after itself. That to boot up about half an hour. So yeah, don't know, difficult one. Difficult to call today. Got wicks everywhere on the DAX this morning. Messy one. Same as yesterday, look. Really, really messy open. And then we moved up and we did nothing all day. So far, messy open. Have to wait. Wait and see where it goes. Let's just quickly look at what this pound's up to. So pound odd come down with double bottomed on the news spike. Same with the pound CAD. And the pound Swiss. Pound yen. Pound New Zealand. Pound US. So there is a very weak continuation at the moment on the pound move, but nothing much. Yeah, you can tell that the market wasn't that impressed or worried about it because we've only got two ADRs just about touched, haven't we? The pound US hasn't even touched ADR yet, so not a big enough news event for the market to actually do anything about it at the moment. Tricky. US building permits up, but building construction down. Could it be trouble getting financing to get rolling on projects? Probably, possibly. Building permits are the main sort of leading indicator, if you like, that the markets basically use, rather than housing starts and home sales and things. Because if you're getting building permits, if they issue a lot of building permits, it shows that the economy is growing and unemployment is dropping. Because if you're getting lots of building permits, you need a lot of money to do the construction. And that means you need to employ a lot of people. So it helps a lot. So building permits are used as a measure to gauge how well an economy is moving. However, if they issue hundreds of building permits and they don't have building starts numbers, so there's two numbers. I don't know when building permits are coming out. Is that today, is it? Yeah. There you go. So building permits and housing starts. These are the two main ones. So if that goes up and that goes up, that's good, because it means we're wanting to build more. So we're asking for permission and we're actually doing it. If that goes up and that goes down, it means we've asked for permission, we've paid a load of money to get the permit, but we actually haven't got enough money to start it. And that has an impact on unemployment. So it's not something that tends to do a lot with the markets, though. They do pay attention to it. It does go into the scorecarding systems, but don't actually pay too much attention. Oh, that was yesterday, wasn't it? Yeah. We've also got oil this afternoon, so just be aware of that. Oil inventories at 330. So that move that started on oil today, if that drops down to ADR today, we could be back completely the opposite direction a little bit later on this afternoon. Okay, we are long DAX. So this support resistance, which is yesterday's high, is our first port of call this morning. Other than that, very, 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 very hard to pick another area here. So this level here, look, which I've got on the chart already, is your next support resistance zone, which is about 3R to the upside on that pre-market break that I've got. Failing that, probably that area there. And then obviously high is up there. So very difficult to call to the upside. Obviously that's ADR. So I'm going to try and hold this up to 5R. If yesterday's high fails, I'm not getting out of my longs at yesterday's high, because if yesterday's high fails, we're probably just going to do something like that. It could have a big run down to yesterday's low. Yesterday's low, I might consider taking shorts off and try and get a bounce at the lows, but not really a lot of volume today, is there? Look, it's not going anywhere, are we? So have to wait for stuff to happen. Morning, John. Anybody got any other pairs or anything they want to look at? I haven't got anything else to look at today, really. Good day on the indices yesterday overall. So hedged on everything yesterday. Literally everything had a whippy open yesterday. So NASDAQ, where's the shorts? Closed out the shorts on the NASDAQ, for some reason not plotted on the chart, and then went long out of that one. Dow, same thing. Where's my shorts? Why are you not showing me shorts? Okay. So yeah, so there's your shorts. So shorts off there. We started, that was the first sign of rejection, look. So we plummeted down, little accumulation, plummeted down, went into an accumulation, had a big bull candle, so it took off the shorts. We pushed down again, added more longs, pushed down, exit. So that was a nice little exit of a hedge. NASDAQ was pretty much the same play, basically. That one, as you can see, came off of the previous low here. So this dotted line. Oh no, sorry, that's yesterday's low, isn't it? So that was just basically price action down the bottom there. Look, and the S&P, pretty much the same thing. So pretty much the same play on all three indices yesterday. They all did pretty much the same thing. So out way too soon on them, though. I mean, could have had all that. So I think that was about 5K So if I'd held those and got back to break even, which I could have done on those longs, that would have been a 5K day instead of a 1K day. But K's a K. Take what you're given. Approaching yesterday's high. So watch this area for price action. So your 5-minute opening range today. So if you're taking the 5-minute opening range break today, you are long only. So the 5-minute ORB would be easier to look at the other chart. So there's your 5-minute ORB, that line there, and that low. So you're long only on the 5-minute ORB today. Risk reward on that. Big candle that. So to get to kind of 1.5 R, which is the minimum you need, you're going to have to break out of yesterday's high. So that's only 1 R. Not a fantastic break today because it's quite big volatility at the open, but no movement much afterwards. So it's all meh. It's all meh at the moment. Everything is meh. So if no one's got anything else to look at, I haven't really got a lot else to cover today because I think today you're going to find we are going to sit here. So your price action today, you'll be lucky, I think, if you get half an ADR of movement today because the market's not going to want to drive any money into anything. Might drive out of the pound, in which case then it's got to put it somewhere. So we'll probably get some movement somewhere else. But most of the stuff today you'll probably find is going to go sideways. So it's just a case of sitting through today and waiting for that move basically to kick in later on FOMC. So I will be watching FOMC like a hawk to see what happens. But we'll analyze it tomorrow, basically, when we know what's happening. You off to bed, Franco? Franco's off to bed already. It is night time, obviously. Do you always take the 5-minute ORB or do you change to the 15-minute pre-market? So it varies. There's no right or wrong with the opening range breakout. The 15-minute pre-market some days is fantastic. Other days you go and I should have taken the 5-minute. There's no right or wrong. The 5-minute ORB most days is safer. Because you get less whipsaw after the 5-minute opening cash balance has gone in. However, it's a much bigger range the vast majority of the time. So achieving the risk reward on it is harder. It's much easier to get the risk reward on the pre-market range. So if you look at the pre-market 15 today, let's say today it just broke long. Yeah, so there's your pre-market 15. Let's say today all we did was we went long, right? To get 1.5 R, you've hit it already. Done. Yeah. It's easy because the range is usually a lot tighter because there's a lot of volume comes in at the open, obviously. So, and then when you look at the 5-minute opening range, which is there, obviously to achieve a 1.5 R, you've got to get a lot further because that range, that 5-minute opening cash balance candle, most of the time is wider than the pre-market range that you take. So while you've got one that is safer and gets stopped out less, it's more difficult to achieve the movement. The one that gets stopped out more gives you the reward faster and also can give you a much higher reward as well. So on those days where you get the break, which just goes bang, 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 and we're off, you'll be sitting up at 5R, 10R on the pre-markets. Post-market, the 5-minute opening range break, you'll very rarely get a 10R move off of that because it's a much bigger movement, much bigger range. So there's no right or wrong. It's literally, it all works. Yeah, so all the testing that's been done on the opening range strategy trying to find that one. So all the testing that I've done on it I've done system parameter permutations, like tons and tons and tons of system parameter permutation tests on all different breaks. Yeah. And as you can see, they're all virtually all profitable. So there's 2,880 parameter permutation tests done there. There's 2,084 of those are profitable. Yeah. So way more than 75% of whatever you would have done works. That one, there's 2,160. You've got 1,600 of those profitable. Yeah. So there's lots and lots of ways to test different parameters, different stop losses, different ranges you can take, different TPs, different trailers. So I've tested all variations. There's 1,600 tests there. 1,535 of them are profitable. Yeah. So this one's testing a profit target, a percentage target, whether or not to add to the initial opening range, and what trailing size to use, when to start the trailing. So all of these system parameters, tested every combination of them, all generate profit. So, when you're looking at this, you just have to pick one and go with it, because you'll have some days it will work, some days it won't. That's trading. Yeah. And it's all about holding it as well, holding on to those winners. So if you're going to set yourself a 2-hour target, hit the 2-hour target, unless there's something really obvious. Yeah. So if you were taking the pre-market break today, like we are here, yeah, the 2-hour target on this pre-market break today is here, which is above yesterday's high. So if you've broken long only and you see this hit yesterday's high and reject, hit yesterday's high and reject, and you've got 2 shooting stars sitting at yesterday's high in a row, don't be stupid. Take the profit and walk away, because there's a good probability that that isn't going to hit target. However, if that high was up there, just let it run to 2R, because the market has to go and find areas to bounce from. It needs to find liquidity sources to change direction. You've got to have orders in the market to make things move around. Yeah. Look at this reaction we're getting at yesterday's high. Yeah. Yesterday, the market pushed up to there. The sellers took control. The buyers tried to take back control. The sellers took control. The buyers are trying to take control. What are the sellers doing? What's the likelihood of this moving down now? Way more than going up. Why? Because for the last 2 attempts at this level, we haven't managed to buy through that level. So there's obviously a lot of limit orders sitting here from sellers in the stock market, driving this back down again. So you just got to use your head with price action, and watch what's going on. But wait for candles to close. Yeah, just because the sellers have pushed this back down again, we've still got 30 seconds left on this candle. So see what this candle does. If the next candle's an inside bar, it means that the sellers actually have got a lot of buyers pushing them back. They haven't managed to take this move back down again. It tends to happen very, very quick. Yeah. So when you hit a wall like this, you tend to get a rejection and then a fast move, rejection and then a fast move. If you get a rejection, 3 inside bars, probably not, because the fast move hasn't kicked in, has it? So it's all about reading price action. But none of it's right, none of it's wrong. It's different every day. So you just take whatever you feel you prefer, and everybody's going to be different. Some people like high risk, high aggressive strategies, in which case the pre-market is probably your best bet, and using continuous mode on the opening range breakout EA to continuously get you into it. Some people like less risk, longer trades, and not being stopped out as much, in which case the 5-minute ORB is probably the best one for you. Or the 15-minute. Or you could try like one of Tom Hurgaard's got strategies that he uses, which wait for the open to complete and then take breaks further down the line. You could try those strategies. You might find they're more the way that you want to trade. There's no, as I say, there's no right or wrong. It's just different in trading. It's all trading. Yeah, because nobody knows what's going to happen. This candle here means that we hit that level and the sellers kicked in with limit orders. It doesn't mean that this candle is going to go that way or that way. That candle that's closed is closed. It's history. It's got nothing to do with the next price action that's coming in from the banks. Right now, as you can see, Barclays went bang. I'm selling a load of stuff here. HSBC went, are you? I've got more money than you. Screw you, Barclays. And it'll pop. Yeah. Obviously, I've got no idea what banks are creating this movement at the moment, but that's what's happening behind the scenes. At the end of the day, if someone walks along with 200 million and there's only 100 million sitting there, 200 million is going to win every day. This is going up. Yeah. So, and the same with the initial market ranges. That pre-market range, whether that is a profitable break today, depends on whether or not there's enough volume in the market to move it. If there's not enough volume in the market to move it, we'll get that sort of movement. Yeah. So, there is no strategy on the planet that you can employ that is going to work all the time. So you pick one and you go with it. And that's the strategy you run. But you run the one that's comfortable for you. Run it through the strategy tester. You use the opening range breakout EA and just run tests. Yeah. So test the pre-market range, then test the 5-minute range. Yeah. So just test the different ranges. Test whether or not when you get stopped out, you want to get back in again. Yeah. Which is what continuous mode does. Use a trading stop. Don't use a trading stop. See what it does. Watch it. The best way to figure out the most comfortable way for you to trade is to watch it play out in the strategy tester and go, I much prefer not being in 2% of loss within 15 minutes because I've taken a tight range at the start. I much prefer in an hour being in a trade but not in much profit. I'm more comfortable that way. You won't know what your comfort level is until you do it. There you go. See, look, that rejection has just been run over. So limit orders triggered at the highs. Buyers are having a second run at that level. If they win, this is the next area that a sell move started. So that's our next where are we going level. So we'll have a look at what price action does there. If you've got long only on this 5-minute ORB and that is enough for you today, take it off. Yeah, it's all the decisions you need to make. We can only automate as much as we can automate. We can't automate everything. Still got to do some analysis yourself. So we'll see how we get on here at this level. So when you're looking at levels like this and you're reading price action, you're just looking for the wicks. Basically, the wicks is what tells you who's in control. The color of the candle, yeah, isn't important. Yeah, so there's a green candle there, there's a green candle there, there's a black candle there. What's telling you that the market cannot get through this level is these 3 wicks. And then the 4th one where we started that move should say definitely not going long. Yeah. So right now we've seen an initial rejection as we got there. Then we've seen a proper rejection and a move down. And now we've seen an attempt to push higher. We've made a higher high and a double bottom, but we've rejected this level again. Yeah. So there's obviously large orders sitting at this level. Yeah. So if this now pushes back down again and we get an inside bar, that break is probably going to be what starts this downward momentum. Yeah, but right now we haven't got any progress, have we? All we've done is we've tried to get through this level twice. We still haven't got a clue whether there's more buyers or sellers at this level. We're still waiting to see what the outcome is going to be. We paint an inside bar. It means that the sellers couldn't drive price down. The buyers who started this move have bought it back again and added to the order. And now if we sit as an inside bar here, we know that there's nobody with more money than anybody else. We have to wait. We have to wait for a fish to come along that's got more money than the rest, or rather a whale, and drive this in one direction or the other. Price action. It's just literally reading into the candlesticks what the banks and institutions are doing right now. So if this pushes down, We get a nice big wick, which closes this propulsion gap, but we end up with a candlestick that looks like that. That still doesn't tell us anything. It means that the sellers tried again to sell this level. The buyers again added more volume to their long orders here. So we are still stuck 15 minutes sideways, equilibrium. Nobody's winning, nobody's losing. Again, we have no clue what the next candle is going to be. So you just wait for price action to unfold. As soon as somebody starts a move, that gives you an idea of what you should do with your positions today. So if you're long and we break that high and we hold that high, we know that we're going to run, where we're going to run to. So the next job is then to look at the next level that we're going to achieve. So we need some orders now, if that breaks long, to stop those buyers moving forward, because the sellers lost that battle. Yeah, if the sellers win this battle, very easy. The sellers win this battle and we go short, we're going to be looking at the last area that we bought, which was there, a potential bounce play, which is where we moved into today, and they started the buying move from. Other than that, we're going down to yesterday's low. I don't know where it's going. Have you thought about trying something like Tom's strategy? What do you mean? Oh, you mean Tom Hugard's? Yeah, I mean, I've tested his strategy, obviously. I couldn't make it work. I couldn't make it profitable. I've back tested the but I mean, this is the thing. Tom, if you're talking about Tom Hugard, which I assume you are, Tom is talking about Tom. If you know, when you look at the way that someone like Tom Hugard trades, he is 100% discretionary trader, no execution by EAs or automation of any shape or form, right? So you cannot backtest what he does. You can backtest the rules of a strategy, which I've done, and it came out as a massive loss. Didn't make any money. So the school run strategy I've tested, couldn't make it profitable. But that's using automation, yeah? So the automation has to have a set of rules. So what are you looking for from a strategy? So if you're looking for a strategy where you pick a range and you take a breakout of it, and if you're looking for at least 50% of those breakouts to move in your direction without stopping you out, great strategy. If you're looking for that to make you a 3R return, probably not going to work. But who makes the decision on whether a trade is profitable or not? Yeah. Backtesting is great. It gives you robustness in a strategy, and it tells you that something is good or bad long term, but it doesn't tell you what to use. Yeah. So look at this. Look at the testing spreadsheet here, for example. Right. So I think I've got the strategy results in it. There you go. That is the DAX school run strategy tested. Okay. So I tested 150 variations of it. 77 of them are profitable, 50% of them profitable. But look at the return on drawdown. 7 grand profit with a 6 grand drawdown. So it's profitable, but not very profitable. Okay. But that is using trailing stops, variations. It's using monetary targets to achieve throughout the day. So yes, it works, but if you're interested in what is the strike rate of the strategy or the profitability of the strategy based on one of these settings, you can get all that data. I've got all that data. But what are you going to do with it? Yeah. So if you're happy to make 7 grand a year off of the 6 grand drawdown, opening range breakout will trade it for you automatically. Happy days. Away you go. If you want to make more money than that and get a higher return on drawdown from a strategy, you need to change the variables, and you need to think about what you're going to do when price gets to certain levels. Yeah, as Tom does. He's a discretionary trader. I'm a discretionary trader. Yeah, so I will use the opening range breakout strategy to take my trades for me, because it automates everything. I don't have to do lot size calculation. I don't have to worry about placing my stops. I don't have to worry about doing anything. I don't have to worry about trailing. I don't have to worry about placing TPs. And I don't have to worry about, am I going to be able to get these orders on in time when the market opens? It's all done for me. That's what automation's there for, is to help us to get into trades. Everything that you saw done this morning was done in a second, fully automated. I didn't have to calculate lot size, didn't have to place these trades, didn't have to do anything. Yeah, all my TPs are put in for me. This version of the EA, as soon as I got hedged, it automatically moved my TPs to my new targets that I want. All done. What am I going to make today? Don't know. That's going to be based on the decisions I make from now on. And that's, you know, when you look at something like my pre-market strategy, my 5-minute ORB strategy, Tom's school run strategy, someone else's London breakout strategy, doesn't matter what strategy you're looking at, they're all going to have completely different results based on the person that's executing the strategy. Personally, I prefer to trade these breaks because I know that a third of the time I can get a 2 to 3R return in 15 minutes. I like that. That's what I like. If you don't like that because 2/3 of the time you get hedged or stopped out and need to make another decision, trade maybe that strategy, Tom's one, which trades later on in the session. Yeah. There's no rights or wrongs, is there? It's just what suits you. But all strategies have a failure point and all strategies have a success, except there's no way of predicting which day each of those is going to happen, which is why you need to pick one and stick with one. Or pick multiples, yeah? So with the opening range breakout EA, it's been purposely set up so that you can customize it as you want to. So this one here is trading the 15-minute pre-market and the 5-minute post-market and the 15-minute post-market. So if you wanted to take a trade on the pre-market and that, and take Tom's version of a breakout, do that. This will do all of it. Or trade one, or, you know, you split your risk between the three, trade two, use trailers, don't use trailers, add to positions, don't add to positions. You know, it does all of it. The ORB EA is massively versatile. You can even set it up to do hedging. You know, you do everything with it. But whether you make money in this market isn't down to an EA, is it? As I've just shown in that spreadsheet. Yeah, I don't know how many tests I've done on this. I mean, I've got 6 spreadsheets of testing. Yeah, all with different tests run. 1,056 permutations there, 1,056 profitable, 100% strike rate on that system parameter permutation test. Yeah. Tested it on the NAS, the DOW, everything. It's just profitable. The strategy is profitable, whatever setting you use. But I can't tell you which one to use because I've got about 30 to 40,000 variations that are all working. So, you know, it's just, it's a question I get asked all the time. What's the best strategy? I don't know, pick one, trade it. You know as much as I do about the next candlestick. Random. Right now, doesn't look like the buyers are able to get through this level, does it? But look at yesterday. Looks very similar to yesterday, doesn't it? There's your open. We moved up, we got stuck. There's your open, we moved up. So far, not going anywhere. Is today going to unfold like yesterday? Or is this going to hold and break? But this is the difficulty with trading, is knowing when to get in, when to get out. We can't time the market, which is what the bootcamp is all about. You can't time when something's going to happen. You can't time, you can't pick the level something's going to happen, because every time you enter anything, there's a 50-50 shot if that's going to get broken. There's a 50-50 shot if this candle's going to be up or down. There's a 50-50 shot whether that is the point or that is the point that we're going to reject. You know, there's nothing can tell you what's going to happen in the market. Your job is to take trades, if you're scalping, with a risk-reward ratio that's positive. That's it. And if you can achieve a higher strike rate than your risk-reward demands to make money, you'll make money. If you don't, you won't. But no one in the world is going to tell you a strategy that's going to be successful. We can give you ideas about what will happen and what has happened in the past, but whether that is going to happen today, Flip a coin. That works, isn't it? So, this is why I'm developing the hedging strategy, because it's, for me personally, I'm finding this a much more comfortable way to trade the ORB, because I now have got the rest of the session all morning until 2:30 this afternoon. I have got all of that time now to sit here and wait and just let the market unfold and see where it goes. I'm not under any pressure to make money. The only pressure I have is this, $1,250, which potentially I can lose today. I had 4 opportunities to lose $1,000 yesterday. I turned every single one of them into a profit and walked away with over 3.5 grand, because I got hedged at the open and went, okay, we'll wait and see what happens. And then I saw a propulsion bounce and I thought, we'll have a crack at that. Well, that was that day. That was a losing day, that one. Yesterday. So yeah, I mean, there's an example of a losing day. Yeah, it doesn't work every day. That was a loser. So yesterday, no idea where it's going. Give it some time. Yeah, so we pushed down. We showed rejection back at that low. We've hit that propulsion gap. We've bounced. So I thought, right, well, we're just about to close out the position anyway. I'm guaranteed to make a loss. So let's have a crack and see if we get a propulsion gap bounce before the market opens. We did. That decision was made by me, human being, not the EA. Because you can give the EA 1,000 rules, but you need to also give it an order which to execute those rules. That's what the human brain does. You're never going to get a full automation on anything. Let's have a quick look at what this pound is up to. Rejection on the pound. Do I want to get into an aggressive again on this today? What have we got? 328. Pound yen completely undone the move already. We've got a weak yen by the looks of things, which will mean we've broken that level. Okay, so that intervention from the Japanese potentially is on the cards now. We've broken the level. We've broken that 148. So next stop is 150. We'll see if this holds today. So this weakness coming through in the yen across the board again will mean that the Japanese will not be happy with this move. So anything you've got short on the yens is worth basically holding and see if we get that intervention come through. Pound odd. So that's bounced as well. I say bounced. It's not really bounced. It's just they're not continuing the move. They're not selling the pound off. So this was a knee-jerk reaction by the looks of things at the moment. We're going to undo. I'm going to take another aggressive on this pound US. It's 1% risk. So I think it's worth a risk based on that price action at the moment. We've got 5 minutes until this candle closes. There is a clear indication that the banks do not want to run the pound down any further at the moment. So if we can pull the pound back up into here ahead of FOMC, I can break even that move. And then if we get a strong US dollar move, nothing won, nothing lost. If we get a weak US dollar move, I've got an aggressive move on, which is going to get me out of that this evening. Yeah. So my average is here. So I'm only looking for a 175 ADR move. So if we get a big FOMC move today, we'll easily see 200 ADR off of it, won't we? So I'll be out of it this afternoon. With a loss, though, this is not a win, this pound US. I'm going to lose about 5% on this. But nothing I can do. Look. Right. that's all I've got for you this morning. I'm going to run the DAX for a bit and see where we go. I'm trying to get this hedge EA finished. I'm not happy with it at the moment. The edge that I've found is great, but there is a problem with the strategy with big ADR days, which I need to deal with. So I need to look at other ways of using hedging to get out of some of these big move days. So I need I've got a great strategy for breaks, works third of the time, no problem. Third of the time, we're going to make 2-3% a day. Hedge days, over 60% of the hedge days, we can get out of very easily with a strong move towards ADR and exit, as you saw yesterday. Yeah, that's not a good example, but other days like this, perfect example. So these days where we get a strong move down to somewhere between 3 to 5R, 60% of those we can get out of, which means that around about 60% of all trades taken with the EA, 60 to 70%, are very easy to make profit out of. There's an outlier of 30 odd percent, which will make a small loss on the day or a big loss. So I've got to figure out a way to stop those big losses. So there's a couple of mechanisms that we can use to do that, to do with position trading strategy, or we just have to manually use our heads when there's news, because it seems to be mostly news days, and stop on those news days with a loss. So I need to investigate it more, but the functionality is all there. And basically, it's the same as the opening range breakout strategy. It just doesn't use a stop loss. Yeah. So you can replicate this with the ORB EA at the moment anyway, by just using a 10R stop. Yeah, and adjust the risk, which I've put a set file out for anyway. And it's working very, very well. But as I say, there are some anomalies which I've got to get over. So I'm not happy with it yet. So I'm not going to put it out there yet, because I want it to be right. It's going to take some time for me to go through the analysis, so it's not a 5-minute job. For instance, with timing, considering to place trades after new bullish or bearish engulfing candle patterns, that's a good sign of price reversal coming May 50% of the time. I don't know, you tell me. Not in my experience. Let's have a look at this chart. Yeah. Bearish engulfing. Did price go down? No. Bearish engulfing. Did price go down? No. Bullish engulfing. Did price go up? No. Bullish engulfing. Did price go up? Bearish engulfing. Did price go down? Bullish engulfing. Did price go up? I can go on and on and on. Yeah. Not a bullish engulfing. I was going to say price went up. Bearish engulfing. Did price go down? A little bit, but then it came back again. Yeah. Bearish engulfing. Did price go down? Yes. How many instances have I just given you of it not working as opposed to working? And I'm only looking on the hourly chart for the last week here, but yeah. As I keep saying, what you're looking at on this chart is historical information. It has absolutely no bearing whatsoever on what the banks and institutions are going to do in the next hour. Because they have rejected this level twice on the pound US dollar now, we've got these big wicks down, gives us a clue that there's not enough sellers in the market right now to make that move further to the downside. Does that mean that me sitting on HSBC's prop desk right now with $250 million over there to execute long on the pound US dollar, does that mean that I'm not going to press the button this hour? No. This hourly candle has nothing to do with the previous 2 hourly candles. I've just shown you that on the DAX, yeah? That massive bearish engulfing. followed by a huge wick with a tiny little body. Massively bearish, massively bearish. What are we doing? 3 bull candles in a row. Nothing. What do these 3 bull candles in a row mean? Nothing. What's going to happen next? Yeah. You can't use previous price action to give you any indication of future price action. Yeah. You can, because you haven't got a crystal ball. You can't use this reliably with any strike rate that is higher than anything. Yeah, there is no strike rate for bullish and bearish engulfing candlesticks. I've tested it. The beauty of listening to me is I'm a programmer, right? So you tell me any scenario in trading that you've ever come across in your life. Literally in an hour, I can build you an EA to backtest it and give you a strike rate on it. I've tested everything. I've been trading for 15 years. I have tested everything. Nothing works. I can tell you for a fact, nothing in this industry works with any strike rate that gives you an edge that you will be able to go, right, that's going to work in the future, because the market changes and adapts all the time. I can give you strike rates on stuff, but I can't give you risk rewards in the future, because the risk rewards that worked in the past are going to be different in the future. Yeah. So I can say for a certainty, when you take a break at the open, the best thing to do is take some of it off at 2R and see if you can get a run at a 5R, because I've tested tens of thousands of variations of stop loss strategies at different range sizes and breaks, and it tells me that those are the best ones to use. But it can still have a losing run of 50 trades in a row, because what happened over the last 3 years of testing that I've done on this particular strategy is never ever going to be replicated in the future, because price action will never be the same again. Every candlestick is different. This thing that you're seeing right here, right now, has never happened. Those candlesticks in that order, at those levels, with those bodies and those wicks, has never been replicated in the past. So, you see what I mean? I'm not trying to be pedantic. That's the fact of life. Yeah. Whether this is going to go long or short from here, I have no clue. And this price action doesn't tell me anything. What it tells me is that we opened, we broke up, and since we've broken up, we haven't managed to go anywhere. So I'm sitting here now half an hour to an hour into the session, and the buyers and the sellers and the banks haven't got a clue whether or not they've got enough money to move the market, because if they did, they would have done it. They're trying very hard. But whether it's a bullish or a bearish engulfing doesn't give you an edge. Yeah. That could probably be classed as a bearish engulfing, right? So if you took that short and you put your stop there, whether or not that becomes a successful chart pattern has nothing to do with the chart pattern itself. It has to do with where you take the trade off and whether you let it run to your stop. That is what makes any strategy, system, chart pattern, analysis, technical line, fundamental, anything on the planet work, whether you take it off at a level that banks you profit or loss. And if you give everybody on the planet a bullish and bearish engulfing and say, what's the strike rate of that? Everybody will give you a different one, because I'm taking it off there, you're taking it off there, and the other 50 people in this room or 80 people in this room are taking it off there, and half of them are getting stopped out. So what's the strike rate of that? What's the strike rate of the market reversal alerts indicator? This is a question I get literally on a weekly basis. Yeah. What's the strike rate of that? 100%. Yeah. People laugh when I say it because they don't understand. It's true. When you get a reversal alert, it works 100% of the time, because what you're asking this indicator to do is show you when there's been a break in structure, i.e. the sellers have taken control from the buyers. What's the strike rate of it? Yeah. Entering a trade, the strike rate is dependent on whether you put your stop there, or anywhere up there, and whether you put your TP there, or there. Every single one of those scenarios I've given you gives you a totally different strike rate on that indicator, because that indicator is just showing you what's historically happened in the past. Its strike rate has got nothing to do with anything but your TP and your stop loss. I can flip a coin, right, and go heads or tails, and I will have a strike rate on that. But I can produce a different strike rate every single day by changing where my stop and my take profit goes. If I traded the same day 100 times, I can produce a different strike rate on that by using different TPs and stop losses. Because whether it's a head or a tail hasn't got anything to do with the strike rate. Whether it's a winning or losing trade has to do with where I'm getting in and out of the order for the position, doesn't it? That makes sense? Again, people say, what's the strike rate on the ADR indicator? Well, I don't know. Did it reverse when it went over 100%? Yes. Okay. So did you take your profit at 3 pips or 300 pips? Yeah, because the strike rate there is going to be different to the strike rate there. Did the ADR indicator work? No, the ADR indicator told you that the price had gone beyond ADR today. Whether or not you made money out of that information has nothing to do with the indicator. It has to do with whether you took a trade at that level and where you placed your stop loss and your take profit. Same with the opening range breakout. What's the strike rate on it? Don't know. Which of the 25 million permutations of the strategy are you executing? Can't give you anything clearer than that, because there isn't anything clearer than that. Sure, reversal, TP, risk, reward, stop loss, all different. Yeah. I can give you different strike rates. Yeah. I mean, this is the thing. I've got, I'm running an analysis at the moment on the new strategy. So this is, I've run 2 permutation tests at the moment of 1,200 permutations on the new hedging variation of the strategy. Both have got a 70% success rate. So in other words, if you'd used the hedging strategy on the DAX over this 3-year period that I've tested, you would have won 70% of the time, regardless of what you used. Yeah. So as an edge, using a minimum of a 1R return, you will always win 70% of the time. Yeah. So this one here made $124,000 profit with a $39,000 drawdown. If you were using a 1R and a 2R trailing stop with a TP of 2R and 5R. Yeah. If, however, you decided to use a 1R and 2R trailing stop with a TP of 4 and 5R, you would have made $111,000 and drawn down by $39,000. What does that tell me? There's no difference. Yeah, the drawdown is 39 and 36. The TP is 100 and 124. The profit. Yeah, doesn't matter which of those you used. They all work. So what's the strike rate on them? I don't know. I'd have to run an individual test on every single one of them. But I can tell you pretty much with 100% certainty, strike rate's going to be roughly the same. Does it matter? No. What matters is the strategy works. That's the important thing. So if you run a detailed analysis of every single day of one of these system parameter permutations, you will get more information about that particular strategy. So I can tell you that you get a clean break 33% of the time. You get hedged and take a loss 34% of the time. And you have an aggressive attempt to get out of the trade 32% of the time. And those aggressive positions, 81 of those 304 worked, which means we've got a failure rate. Now we need to deal with that. So that's what we analyze. What do we do about these failures? Yeah. So the $6,000 profit, $6,000 profit, $7,000 loss, $3,000 profit, $2,000 loss, $2,000 loss, $2,000 loss, $3,000 profit. Didn't take any trades that day. $24,000 profit. We need to do something about that. Yeah. This is what the analysis is all about. There is no, and this is just one, right? So this here is 3 years worth of testing on one of those system parameter permutations. If you want to do this thoroughly, you need to test 1,200 of those and get a spreadsheet for each of those and find out which one gives you the highest strike rate. So see how much goes into testing an EA and testing a strategy to make sure it works. Not a 5-second job, because every single one of these permutations has got a different strike rate. And this is when people say to me, what's a strike rate? Which one? I don't know. It's about 30% for a clean break, you know. So, you know, they all, this is what I'm trying to say, they all work. But whether you make money or not, it's got nothing to do with any EA that you'll ever place on your chart. It's got to do with you as a trader and what you can read into price action and what you can see and whether or not you take it off. Yeah. Not an easy job. You need to be a rocket scientist. So we are still sitting high of the range. So this is the 5-minute opening range. Basically, we've retested the high of the dailies, the opening cash balance today. Tested it, using it as a springboard. So looking for a higher high. So market structure looks like at the moment we are going to hold bullish market structure today. So looking for targets to the upside to get out. And then wait for a pullback. Okay, I was going, wasn't I, before I started waffling? But anyway, I do that a lot. If anybody's new in here, that's a pretty typical morning. I just waffle a lot about stuff because we're waiting for basically stuff to move. So there's nothing else to do. I don't understand these trading channels that, where all these trading YouTubers where they make it exciting. How can you make this exciting? We're literally watching paint dry. We're watching this green thing get printed and then unprinted and then printed and unprinted. It's very difficult to make it exciting, isn't it? Thanks for subscribing. Opsy Tesposi. Is that your name? Opposy Tesposi. I can't even say that. Thanks for subscribing anyway, whatever your name is. Is that a real name? Opposy or Opposy? Or is that a fake name? I don't know. Anywho. So yeah, inside bar being painted at the moment. We're not going anywhere on this thing today. I said this yesterday morning, remember? I said, I'm going to let this play out for the day. I suspect I'm just going to lock in a $12 to $100 loss. What I actually locked in yesterday was a $180 profit. So we'll see. Unless we get a move that I can identify as potentially heading somewhere that's going to bounce, i.e. something like that, I don't think we're going to go far today. So we'll see what happens this afternoon. So just be prepared for a day of complete and utter boredom today across everything because unless this pound comes to life, I think what we'll be looking at today is very much this while we're waiting for FOMC. So I suspect we'll be looking at pretty much exactly the same ADRs and the same RSIs later. Oh, we've got a couple of hourlies. Let's quickly look at those. Oh, it's the same. So Euro Pound RSI extension to the upside. That's because we've got an ADR hit. Good rejection. And we've got Pound New Zealand ADR hit to the downside. Sorry, RSI extension to the downside. Out of propulsion as well, that one, look. So that's a retest, that area as well, look. So, so we had this accumulation for a day. Then we broke to the upside, rallied, retested it. Buyers added to the order, sat there, rallied away. So this is the first retest of that propulsion gap. We've got all of that move basically to profit take on. So there's all these upside targets. Look, so much room to the upside. It's just such a shame we got that CPI come out negative. It's really not given the pound a reason to pop today, is it? Rajiv, did I do oil? I have done oil today already, but I'll do it again. We're pulling back. So watching this area here, which is 150 ADR to the downside. We've got oil inventories at 3:30 this afternoon. So your oil inventories are going to rally or dump. Well, it's going to rally the market, it won't dump it. But if we can get down into this sort of area by 3:30, I think we'll probably get a pop. However, obviously it's FOMC. And again, oil is priced in dollars. Yeah. So anything that's priced in dollars, gold, oil, you know, pretty much everything, you're going to find it's going to have a difficult time moving today because they're not going to want to make any big transactions until they know what the FOMC is going to be. Because if the FOMC result comes out as we're going to increase rates and we think we've got more to do, that's going to be bullish for the pound, which means that the pound's going to go up. So you're going to find everybody is suddenly going to buy up oil at this price because if the price of the US dollar goes up, oil's going up as well. Yeah. Oh my God. That's a good scam. A posy to posy. We haven't had that in there for a while, have we? Helpy FX, the biggest scam in the Forex industry. A posy's a bot. So anyway, so I talk to them. So yeah, so we're looking for push up. Basically, if FOMC comes out as bearish today, and they start talking the US dollar down, we've hit terminal rate. We're really happy with the rate of inflation drop. So I don't think there's anything more to do on interest rates. We'll be waiting for basically data to tell us when to drop them. The US dollar is going to drop. So they will hang on to buying oil until the US dollar has made its initial move down because oil will become cheaper. They want to buy it at the cheapest price. So I don't think we'll get a move down to here ahead of FOMC. But we have got oil inventories at 330, which could potentially move it down. So obviously, the difficulty with oil, when you look at this move, we looked at this for a buy, and it was absolutely spot on. It's probably the most spot on trade I've got this year, that 38 retracement. Yeah, it's the spot honest thing I've done, I think, so far this year, is call that as a long. Measure that move, measure that move, measure that retracement, measure that retracement. If we're going to get a measured move higher, which you do in supply and demand-based products, we have got a lot further down to go. But we've got FOMC. So it's not going to be, oh, we want to pull back to here. It's going to be, what's FOMC going to allow us to do? So if you stick a fib on that new move that we've got now, you're looking at a 38 retracement being in that accumulation and a 50 retracement being back down to that monthly high. So those two levels, yeah, 150 ADR. It's not even a 38 retracement. So it's very, very difficult to pick a pullback zone on this. It's moved too far. Yeah. In theory, you could get pull back all the way back down to here or here, and they class that as the leg. Yeah. End of the day, we don't know, do we? Nobody knows. If we knew, we'd do it. We don't. So we don't. Anyway, that's the first time we've had Helpy FX. Subscribe before spamming the chat. For those that don't know, Helpy FX, they stop by every now and again. I like to go to their website just to show you what this industry is all about, really. It's about scamming you out of money. So Helpy FX, free Forex signals they give you. And they have a very, very specific amount of pips and strike rate that they will promise you will get. Yeah. So you will get 80% accuracy over years. That's pretty specific, isn't it? Over years. Where's their profits gone? Yeah. So they got a 75 to 85% strike rate on their signal. They're not sure. It's somewhere around 75. It's, it depends because we adjust it. Basically, we give you a signal, and then when the price has gone, if it's not gone our way, we change the signal price, and so that we make sure that we guarantee a profit. We'll deliver you 300 to 1,000 pips. Big range. 300 pips on the ZAR is literally about 1 5-minute candle. So promising me 300 pips, what are you doing? Taking one trade a year on the ZAR with a 75% strike rate? How are you making money? Or are you taking 1,000 on oil, which moves about 19 pips a day, and taking lots of trades? They average around about 3,900 to 11,240 pips in profit. Quite a big range, isn't it? Think about it. They don't do videos and live streams, so they're absolutely useless because they don't trade live. They don't trade for real. And they'll give you an ebook. Yeah, they don't give you any tips on how to trade, and they don't know anything about news. But in the paid group, you can get 2,000 to 4,000 pips profit instead of a 300 to 1,000. So go and subscribe to Healthy FX now, if you're stupid. There you go. There's your advert, Helpy. Now I'm going to ban you again. Report. What should we report them as? Promoting terrorism, harassment or bullying, misinformation. There we go. There's a bit of fun. We haven't had Helpy in here for a while. DAX has broken the highs. So going to be watching 3R here. And then we're watching that level there, which is 5R. So that's my target, 5R. So basically, whenever I get into a hedge, automatically taking a 2R is usually not productive and doesn't make you money. So what we're looking for is price to make a decent break. So somewhere between 4 and 5R. Again, doesn't matter which of those you pick. They both work. Some days it will do 4. Some days it will do 5. So moving up to 5R means basically if we get there, we can take our profit off. By the time we get there, we're very close to hitting our average daily range, which is usually when we start a pullback. So that's the plan to the upside. I will be watching this level though, price action. So if we get an obvious rejection, not just one candle that goes like that, but another candle that kind of goes like that, or we get a big move up and then we get a big bearish engulfing, we paint a couple of inside bars and then break. Yeah, it's just set any kind of price action that says it looks like it's coming down. Obviously, I have no idea if it's coming down or not when that price action is painted, but that's basically all you can do. Wait and see. DAX having a go, JC. Yeah, it's having a go. That's probably good terminology. It's having a go. So clear market structure. In fact, it's a continuation from yesterday. Look for a pullback to pre-market highs and off we go again. So we'll see where we go to. But that's the plan. I will look for an exit point towards the upside at some point. Then we'll see if I can get out of the hedge to the south. Right, I'll leave it there. Anything you need, let me know. I'll be back 2:20 this afternoon for the New York session. We'll trade the US indices. Hopefully we get a clean break on something this afternoon. We haven't had a clean break for 3 days now. So fingers crossed we actually get clean move this afternoon on the US indices. But I'll be watching the FX moves. Unlikely we're going to get a lot of movement, as I say, but I will post in the Telegram group anything that I get out of. I haven't got anything that I can really get out of at the moment because I don't think we're going to get enough movement today. So, but got that aggressive on again. So all I'm looking for from the pound US today is that pound to do a V-shaped recovery move, sit there, and then hopefully get that move up on the FOMC weakness. So have a good day. If I don't see you this afternoon at 2:20 for the New York session, I will see you tomorrow morning, 7:50, same time for Frankfurt. Yeah, anything you need, let me know. I'll be in Telegram. And I'll see you guys soon. Have a good one.